How's it going, man?
Hey man, how's it going?
All good, all good. Is your background bad, like behind you?
Are you talking about mine or yours?
Yeah, no, no, yours.
No, it's just my logo.
Okay. I actually had these people, they do like social engineering and stuff like that. Like they're experts and they said that using like the backgrounds is not good, apparently.
Oh, really?
Yeah.
Well, as far as what, like the visual or
They say that the showing the background actually helps Zoom meetings because it shows people kind of like a little bit about who you are. Like if you have books behind you or stuff like that, or like a trophy. I'm trying to connect my camera.
yeah, behind me is a kitchen. I don't think people
Yeah.
want to see that. I live in an apartment, so I don't know if people want to see that.
Okay, so I got this. I'm trying to set this new camera thing up. Okay, I think I got it. So I'm actually using my iPhone as my camera. There's an app
Oh,
that, yeah, man, it's crazy. So, oh shit. Um, okay, so it
that's a
should
nice
be
place
good.
you
Like,
got there.
should be good. Yeah, this is actually my porch. It's actually my porch that I kind of
Oh
converted
wow.
into like an office.
Oh wow, that's really nice. Yeah, that's
I had a smaller. Okay, here we go. So,
man, I need to get into the networking business, get you a house like that, right?
it's actually a small house, man, but it came with a porch. But
Yeah,
it's
that place
actually,
is nice.
yeah, it's actually a small house. Oh shit, I need lighting. Yeah, man, I'm trying to level up my content. So like all these events that I'm doing, like you might not do them as often as I do, but for me, I'm like, oh, I'm losing hours of content that I have to generate every week. So I might as well just, invest and get some good, setup. And
Yeah.
funny enough, I'm using a phone, like an iPhone as it happened, I actually got a new iPhone. So I have two iPhones, but I got it for like $50 a month and I got two phones.
Yeah, man,
Instead of getting like a $3,000 camera or anything,
oh yeah,
this
yeah.
actually shoots in 4K. And right
Right.
now, my camera is that phone using an $8 app.
Yeah. No, that's I mean, that's what you
Yeah.
should be doing. My one of my mentors, he's like, kicking me in my ass because, he said I don't make enough content. Just kind of what you were saying. Like I need to be making, Instagram reels, YouTube videos. It was TikToks, but now we don't know if TikTok's gonna be around here in the States much longer.
Yeah.
So
Like I don't want them to ban them because obviously like it's another channel. So like let's say I
right.
run a lot of Facebook ads. So if they ban TikTok, then and my Facebook ads ever stop working, essentially what that means is I don't have another place to go other than Google. And I'm not, Google's a little bit different. So I don't want them to ban it, but at the same time, I've been holding out on posting to TikTok because I'm like, well, if they ban it, what's the point? So I want
Right.
them to ban it to be like, yo, I was right. But at the same time, I don't want them to ban it.
Right. Right. Right.
It's my lightning. Yeah, so we'll get started in a couple minutes. We got some good questions lined up.
Yeah, no, this is good. Definitely appreciate you for having me. Certainly didn't want to miss it. Been thinking about it all week, so I'm looking forward to it.
Awesome, man.
I signed up for another event that you sent out. I think it's on the 6th of April. It's like 40 free tickets, like 10 executive or something like that.
Yeah, yeah. So that's actually one of our members and a friend of mine at this point who I met through the group, Anderson. So he does this event once a year. It's called Avanza. It's all about real estate and investing. And he's actually bringing a lot of really high quality, high caliber speakers. Um, so it's like a conference. There we go.
Yeah,
So
yeah, no, that's
it'll
good.
definitely be a really good event. And we're trying to get it sold out. We should hit the mark.
Yeah, yeah, I definitely signed up for that, so I'm looking forward to it.
Nice. Did you get the executive ticket? Were you able to get it?
Yeah, yeah, I was.
Oh,
Yep.
nice,
Yep.
nice. Because
Yeah, I'm
I
like,
know someone else was trying to get them, and they're like, damn, yeah. Those include food and like you sit up close, so
oh,
it
yeah.
should be a good experience.
Yeah. Definitely looking forward to it.
Awesome. All righty. Well, to everyone that has joined so far, thank you for coming. Let's give it a couple minutes. Let me send out a little blast letting people know that we are about to start. So we have some good conversations lined up. We're definitely going to be talking taxes, money, entrepreneurship. So I'm really looking forward to today's interview. Um, so let's just give it a couple minutes. Dun, dun, dun. All right, all right. Wait, I'll be right back. All righty, let's just give it a couple more minutes. Just setting up some stuff here too. Yeah, we're actually going to be moving platforms too. So that's going to be exciting.
Yeah, seeing that message. Do you
Yeah.
have you officially said where to, or is that still?
Yeah, so we're going to be moving to school. I don't know if you guys follow Alex Hormozy at all, but school is actually like I guess he made a post one time that it was like his biggest investment ever. And I'm a huge Hormozy fan. That's not the reason I'm moving there. That's just a side note. Um, but it's just going to be a lot better than Discord, because Discord's just more for like gaming communities. You just talk stuff all day. School is actually more geared towards learning, serious conversations, and it what makes me most excited about it, apart from having the courses in the same place as the community, is the fact that it works like a forum, kind of like Reddit. So, for example, a lot of people they go into, let's say, Discord. They check in today with Young Sharks, but they might not log in again for another week because they're busy, they forget. So, if anybody replied to their question, they basically miss it. But on school, you can have a post that's 3 years old, and if somebody responds to it, you'll be notified as long as you're following the post. So
Mm.
it'll just make it a lot easier to communicate and have conversations on the go. So that's what I'm really, really more excited about. That you can, like, someone can be having a complete conversation with someone else, and it doesn't affect the rest of the community, and they don't miss out on their own responses.
Mm.
Yeah, school is really, really dope. I highly recommend it for any business. Communities is definitely the thing of the future. And let's just give it like 2 more minutes. Just setting up some stuff up on the back end, guys, and we'll get started. Sweet. All right. Yeah, let's just go ahead and get started. Are you ready, brother?
Yes, sir. Let's do it.
Awesome, awesome. All right. Let me, why is Zoom not showing? There we go. All right. So usually with these interviews, the goal is to try to provide as much value as we can. I'm sure a lot of people they have questions about taxes and money. We'll be getting to that. Also, we'll be touching upon some entrepreneurship stuff at the end. Always like to ask people what their books are, who do they follow on YouTube, and all of that. So to get started, just maybe do an introduction for us, maybe touch a little bit about your story, what brought you here, how did you get into the accounting world, and we'll take it from there.
All righty, sounds good. Well, thanks for having me, guys. I'm glad you all joined tonight to talk taxes and kind of hear a little bit about my story on a Thursday evening. I feel like if you're jazzed to talk taxes on a Thursday, you probably should go get help, right? But but I appreciate you guys having me. My name is Dyezae Smith. I'm the owner and founder of Azel Tax Advisor. I'm a CPA. I'm also a certified tax advisor for Main Street businesses. I'm under the Mark J. Kohler tree in that regard. If you ever heard of him, he's kind of like the superstar. He's like the Robert Kiyosaki of taxes in our industry. He's kind of the guy. So I learned everything on the tax planning side from him. I obviously got my CPA while in school. I graduated from the University of South Florida. Go Bulls, right? I'm out here in Tampa. I'm not from Tampa. I'm from St. Augustine originally. I've been living in Tampa since 2018, since I transferred here to USF. And my journey kind of into the accounting world is a little unorthodox. I actually have an athletic background. I played football. If you haven't noticed, I'm kind of a bigger guy, right? I was about 300 pounds. I was playing college football, doing very well there. And then I ended up tearing my knee pretty bad and had to get surgery. The doctor said, "Hey, we can put you back together, but you're probably never going to play again." And they were right. I actually don't even run the same, let alone play football anymore. So it was a pretty nasty injury. Thankfully for me, I had just switched my major to accounting right before that happened. So once football was over, I then decided to put all the energy I used to put into sports to now put it into my educational journey. And I excelled in college, did very well, ended up graduating. I have multiple degrees, all in accounting. Ended up sitting for the CPA exam that I would later go on and pass. I've worked in public accounting. I've worked in private. I've done, tax returns. I've worked in corporate compliance. I've done transfer pricing. I mean, you name it, I've done it in the employment space. But that wasn't what originally made me fall in love with accounting. I love the fact that it was a puzzle. I love the fact that you can help people solve their issue by putting out creative tax strategies. I wasn't doing that while at work, right? What I was doing at work was coming to work, burying my head in the desk, preparing a bunch of tax returns, and feeling very unsatisfied, very unfulfilled about what I was doing at work. So that's what pushed me to then begin to pursue more education, right? That's important as being a business owner to continue to educate yourself, but then to take that leap of faith and say, hey, I want to pursue my passion now. So that's what I've been doing since 2022. I've grown a pretty solid book of business here. My niche market, which I'm sure we'll get into later on, is typically business owners with a tax issue, right? Business owners that are netting $100,000 or more on an annual basis, that typically deal with a lot of real estate, have investments, that sort of thing. They usually come to me. Why? Because like I said before, they have a tax problem. If you're a business owner and you've only, done $10,000 in revenue, you don't really need me at this point, right? You could go the much cheaper route, spend money at TurboTax, get your taxes done. You're not going to owe a lot, no big deal. But if you have a landscaping business and you're reporting, $800,000 on an LLC, which I've seen before, well, you need me because you're paying a lot in taxes, and there's strategies available to you that can help you lower your taxable liability. So that's kind of my focus is proactive tax planning. I also help with retirement planning. I also do some of the tax compliance, right? Obviously, the guy that creates your tax plan should probably be the same guy doing your tax returns. That just kind of makes sense in that regard. But my main focus is the proactive tax planning, and I kind of roll those all into one service, and my clients pay me on a yearly engagement, right? I'm not just your friendly neighborhood tax preparer. I try to really add value in business owners by helping them increase their cash flow by legally leveraging the tax code to avoid taxes.
Nice, man. Nice, nice. And I see it all the time with CPAs that would love to be in that position to, be working on those proactive, with those clients that are trying to prepare for taxes, when the year starts for next year's taxes instead of working backwards. So I definitely have some good questions. This definitely is an area where I think I need a lot of help, and I'm sure other people do as well. So going back to your story, you said you did some public work and some private work. So what was the public work, if you don't mind talking about it?
Yeah, yeah. So my time in public accounting was mainly spent preparing tax returns, right? That's typically what they look for.
Nice.
Just kind of, for lack of better words, you're kind of just a warm body in a seat. You work many hours, 65, 70 hours, especially right now in March. Those guys are working 70 hours a week. I kid you not. They work very, very hard. And you start to feel burnt out very quickly. You never really see your family. You wake up before the sun comes up, and by the time you've left work, the sun is already down again, right? So it can become very depressing. I've worked with in places where my coworkers were crying at their desk because they were that busy. I mean, it can get very, very miserable very quickly. Even if you have your CPA license, it ultimately doesn't matter. You're there to do one thing and one thing only, and that's to get those tax returns done quick. And if you can't do that, they're going to get rid of you. They didn't get rid of me, just full disclosure. They didn't get rid of me, but I knew very quickly that this was not going to be my life for the next 30 years, right? We live in a era where we see a lot of freedom via the internet, via social media and stuff like that. People living amazing lives while doing things that they love. And I started to realize, hey, I don't love this. I do love accounting. I don't love this. So I need to start pursuing what I actually love. And that's what led me to starting my own company.
So what do you love?
I love,
What's your favorite thing?
yeah, yeah, absolutely. So what gets me out of the bed is being able to sit down with a client, look at their tax returns, being able to identify areas where they could save more money, being able to educate them on strategies, being able to help them realize that, hey, I've been operating my business in a specific way and it's actually hurting me financially. If I start to do it this way, I could then save on taxes, which increases my cash flow and will help me become a more profitable business down the road. That's what I enjoy doing.
Nice. So it sounds like you deal with like business owners who basically they're overpaying for taxes, or they're probably like just unaware of a lot of things. That's where you come into the picture. So what are some of those things that your typical client walks in and you're like, man, how have you been doing this for 5 years? Or like, what's the typical problem, like a very noob starter problem
Yeah.
that you see often?
Yeah, absolutely. So, typically a lot of clients that I meet have accountants and CPAs. And the problem that they're running into is their accountant or CPA is not educating them on how they can maximize their tax strategies. It's very hard for a lot of my clients to get in touch with their CPAs. Why? Because they also operate the same way that they were taught when they were in public accounting. Grow practice, focus on the tax returns, be really busy from January through April, and then in May disappear. That's kind of how a lot of practices are structured. Mine is not structured that way, right? I would much rather have a leaner book of business that I can add value to instead of having a giant monster business where I'm up to my neck in tax strategy. So typically, when someone comes into, they have a consultation with me, I usually try to start with the low hanging fruit and say, hey, these are some of the areas where your accountant has hit on child tax credit, right? Itemized deductions, those sort of basic things that you can get from TurboTax, right? I then try to maximize that and say, okay, let's keep that. Let's keep doing that. But in addition, let's also add the home office deduction, right? You have a piece of real estate, you have multiple pieces of real estate. Let's do a cost segregation study. Let's add bonus depreciation. Let's open a solo 401k. Those are what I consider more advanced strategies that my clients typically love and have been employing throughout the year. And it's done me well, very well.
So what separates, so if you have a client who has been working with another CPA, and I'm sure you kind of answered the question, but basically where I'm going with this is like what makes one accountant be able to save the person more money than what another CPA or accountant wasn't able to do it in the first place?
So a lot of it is just know-how and availability, right? As I mentioned before, a lot of these CPA owners or CPA businesses, tax preparation businesses, they have such a ginormous book of business based solely around the tax returns. They don't have the time throughout the year to be able to meet with their clients because they're so busy, right? And then they start to neglect some of that continuing education. A lot of accountants don't know these strategies. They aren't even aware of, how to implement a solo 401k or, what a cash balance plan is or how to run a cost segregation study or the power of short-term rentals, right? For all my real estate investors out there, you may you may be in a better position owning a short-term rental versus a long-term property from the standpoint of your tax return, but your accountant's not telling you because they don't know. I've taken the time to invest in that education to get certified under Mark J. Kohler, someone who has 30 years of accounting, tax and accounting experience. I haven't even been alive 30 years, right? I'm only 27, right? So I'm learning from someone who's really a master, and I have that certification. I have a network behind me. I'm part of the tax advisory network. You can look me up. I'm on his website. You can find me there. Um, so I've taken the time to really learn and try to master this thing. I'm not perfect. No one is, right? There's a ton of strategy out there. I'm sure there's certain areas that other accountants focus on that's not my strong suit, but I'll tell you, right? So that's kind of what separates me from other your typical tax preparers.
So so the average business owner, let's say less than $1 million a year,
Right.
when it comes to being proactive, so what's the number one, number two things that they should at least check off or be aware of or look into?
Okay. So for me, the first thing, and this is kind of before even getting into those two things, right? So I would say three things. Number one is being aware. There's two seasons, right? Right now we're in tax preparing season, January through April. That is tax preparing season. May through December is tax planning season. For some people, August through December. For me, it's May through December because we're implementing throughout the year. We're rolling, right? Especially if you have a client that maybe has 4 to 5 strategies, you got to go now. You got to implement those things right now. So number one is being aware. Understand that once April ends, it's now time to focus on the planning area, right? If you just filed your tax return, you say, hey, I just paid Uncle Sam, $60,000 in taxes. Well, let's spend the rest of the year focusing on how we can avoid doing that going into next April, right? So that's number one. And then number two, I try to look at their business from a holistic standpoint, right? What's your entity formation? That's usually the first thing I looked at. I'll give you an example, and this may be kind of jumping ahead, but it makes sense right now. I had a client. He had a landscaping business, did very well, was making about $1 million a year in his landscaping business, around 800
That's
$900,000 in his
gross,
landscaping.
gross,
Yeah, gross, right.
gross.
So all of that income was being reported on an LLC. That's a huge, huge red flag, right? Why? Because if you have an LLC, you're paying self-employment tax. That's 15.3%. If you do the math on $800,000 of income,
A lot.
that's a lot
Yeah.
in self-employment taxes, right? So he was paying Uncle Sam a lot. And the issue he was having is his CPA wouldn't help him, right? His quote unquote strategy was buy more equipment, buy more, buy more mulch, buy more hire more employees, these sort of things. So it led him to spending, making unnecessary purchases. So here's the interesting part, right? Before you ask me another question here, here's the interesting part. When I looked at his tax return, he wasn't paying a lot in taxes. He really wasn't. He's paying about 5 grand. So now we go from CPA tax advisor
Hmm.
to more virtual CFO. I now had to comb his tax return to try to figure out what exactly was the issue. Well, what I found was what I just said earlier. His expenses were extremely high, right? So he was reporting about $850,000 on an LLC. His cost of goods sold, his expense line was about $730,000, right? So when I started to do my KPI, key performance indicators, his gross margin was about 5%. If you do any sort of benchmarking on what a landscaping business should be on average, it should be anywhere from 15 to 45%. So therein lies was the problem. He was overspending to avoid Uncle Sam. And I told him, well, your taxes is hidden. It's in the expense section of your tax return. So I kind of reverse engineered and increased his profit margin to around that in between 45 and 15% got me to about 20. Then we got to see what his actual taxes should have been, and he should have been spending around almost 6 figures in taxes. Now we can start the tax planning because I've then revealed the issue to him. So, that's what, going back to earlier, kind of what do I enjoy? That's what I enjoy.
Right, right. So, when it comes to the LLC, so the way I understand it is, um, so if you're like a sole proprietor, then you're self-employed, you pay the 15%. But then if you have the LLC, you're still considered a sole proprietor, right?
Yes, sir. Yep. So what,
Unless
what
you
it
do,
is,
yeah, yeah, go ahead, man.
yeah, yeah. So the LLC is important for one particular reason: asset protection. Through the eyes of the IRS, the LLC is what's considered a disregarded entity. So all that income and expense is still going to be reported on a 1040. It's going to be on your Schedule C. It's still important because you want that asset protection. So if you own a landscaping business, right, going back to that, and someone got hurt or something like that, they could sue the company, but your personal assets would be protected. That's why the LLC is important. You should have an LLC at the very minimum, in my personal opinion. It doesn't really cost you a lot to open one, and it certainly doesn't cost you a lot to maintain one. So that's why the LLC is important. But from a tax perspective, it does not serve you any real benefit as far as tax savings, because you're still hit with the same sort of taxable liability that a sole proprietor would have.
So where does the S corp come into play?
Yeah, absolutely. Great question. So you want to generally switch to an S corp once you're netting, right, revenue after expenses, a very minimum $50,000 or more, right? Anything less than that, it's just not really worth your time, because the S corp is a more expensive entity to both maintain and prepare. From a tax preparer's perspective, an 1120S could run you easily $1,500 minimum, right? So if you're only making 30 grand, it just doesn't, from financially, it's not that advantageous for you, and you're not going to save a whole lot in taxes. Once you get to 50 or above, you can start getting fancy
Mhm.
with the self-employment tax, because you can do what's called a K1 split, a 50-50 split. You take 25,000 is reported on your K1, the other 25,000 is being reported on your W2. That will essentially cut your self-employment tax in half, right? So now you're not paying 15.3% anymore, because only 25,000 of that is being subject to that same amount. So it becomes very advantageous once you start making more money.
All right, let's see if we can break it down, like a timeline visually.
Yeah.
So, with short words, let's say a startup, less than, making, so the person might have a job, maybe they don't, but their business is making less than, let's say they're making 30K a year or less. What should someone do at that point?
LLC for sure, 1,000%. Start an LLC, keep it simple.
Okay, so now if they're making, let's say, from 30K to 100K, maybe profits, I would assume at that point are not gonna be super big. Let's say regular profits. What should someone be doing at that point?
So if you're 30K to 100K is kind of a wide range. If you're still 30 to 45, keep the LLC. Once you hit 50, once you know for a fact you're gonna net at least 50,000 in that year, you should be looking to file your form to become a S corp, which can retroactively take you back to the beginning of the year, right? If you realize, hey, we're gonna be netting $50,000 in November, you can still become an S corp, and then it'll retroactively bring you back to January 1 as if you started as an S corp at the beginning of the year.
Yeah. So when you say net, we're talking about the business profited $50,000.
Yes, revenue after expenses, net profit.
So from a CPA standpoint and from your experience, if your business is not profiting, net, like after all expenses, at least 50,000, the S corp doesn't really make sense.
Right, exactly. It doesn't really serve you a whole lot from a beneficial standpoint. It's just not that great. I wouldn't encourage it, frankly.
What about people that have, businesses? Because I would say a business that's bringing gross 30,000 a year, 50, 60, 70, 100, they're probably reinvesting all of it, unless it's someone that has a like a side gig, a side hobby, they just make the money, keep it. But if it's like a legit business and they're making that, they're probably reinvesting the rest, or they haven't figured stuff out, they have high expenses. So let's say a scenario, someone makes their LLC business makes $70,000 a year, and there's almost no profit, like less than $5,000 in profit or $10,000. What should someone be looking at in that case, or what should they be worried about, or what should they be doing?
Well, at some point you have to evaluate, the type of money you're making, right? So if you are, you're generating, close to 100 grand consistently, but you're only profiting around $5,000, at that point we need to evaluate what exactly are you spending these resources on throughout the year, and how can we decrease that, right? Because ultimately, as a business owner, you want to be able to grow it into a profitable entity and eventually start to pay yourself, right? I mean, that's the reason why we're doing this. We're pursuing freedom both financially and the freedom of time, which I would argue is probably more valuable than financial freedom. Being able to do whatever you want whenever you want is extremely important and very valuable. So if you're only netting $5,000 consistently, let's take a look at what exactly you're doing. Let's look at the books. Let's look at the bookkeeping, and let's see areas where we can decrease that. Kind of my case study. He was overspending, right? He was making about $800,000 in his business. He's only netting like 30 grand. There's an issue there, and the issue was his CPA was having him buy things that weren't necessary just so he can save on taxes.
So that guy, he was on purposely running his business with high expenses to not pay taxes.
That was the tax strategy, a very poor tax strategy, but that was the tax strategy because his CPA wasn't knowledgeable or didn't want to allocate the time to him to be able to properly educate him and then implement a solid tax strategy.
So what about like what Grant Cardone says all the time? Go buy a plane to not pay taxes.
Right. Well, Grant Cardone's a multi-millionaire, so
That's what
his
he
tax
says,
problem is pretty
run at the
extreme.
bank.
Right. His tax problem is pretty extreme. When you're owing Uncle Sam consistently, 10, 15 million a year, I would probably say let's buy a plane too.
Right. Right. So there is justification for buying stuff for saving money on taxes.
Absolutely. When you get to that level of success, I mean, a solo 401k is not going to move the needle, right? I mean, you can only, and I say only, right? In his case, you can only invest for 2024 up to $70,000 and take a write off of that. For someone who's making $300,000 in their business, that's massive. That does a lot. For a Grant
Mhm.
Cardone, that does almost nothing,
Yeah, that's
right? I
nothing.
mean, he probably wakes up, he's after he's done his laundry, he might find $70,000 in a pair of jeans somewhere. Like it just
Yeah.
doesn't do anything for him.
So what's the justification for spending money? Let's say let's say I'm making $100,000 a month, and my profit margins are 30%. So like, when do you justify actually making stupid purchases or buying stuff for the sake of saving money on taxes?
Right. So for me, I paint it this way, right? There are good deductions and there are deductions that aren't necessarily bad, but you could find better ones, right? I would say not all deductions are created equal. And it kind of goes back to what I've been saying. Like, yes, we can buy a piece of equipment and you can write that off, but does it serve a business purpose? Are you going to use it? Is it necessary? Right? If the answer is no, well then let's try to find something better. Let's take that same money and let's put it into your retirement. Let's do a mega backdoor Roth. Let's do a cash balance plan, right? Because what people need to understand is when you are consistently avoiding taxes on a yearly basis for 20 or 30 years, you're cutting out your own retirement, right? If you're not paying Social Security and FICA, you're not going to have anything when you retire. So my philosophy is always for any CPA or tax strategist out there, your retirement planning should be just as important as your tax planning. So for me, if I'm implementing a tax plan, 9 times out of 10, we're funding a retirement somewhere. It's just that important to me. So that's why I say there are really good deductions, solo 401k, cash balance plan, Roth, life insurance, that sort of thing. And then there are other deductions such as we bought a car, we bought a piece of equipment, we did a company retreat and we wrote that off. Fine. You can write all those things off. Company travel, it's in the tax code. You can write that off so long as you set it up properly. But is that the best strategy? Could we have done something better? Could we have maxed out your solo 401k for the year or a Roth or something like that? Could we have vested into a whole life insurance policy? Those are things that really move me the most, and it helps the client build long-term wealth.
Right, right. So you probably have seen business owners who have horrible businesses, and then you have helped some people get, improve that, but I'm sure you've also had people that are very proactive and they have very profitable businesses.
Yeah.
So, from the top of your head, what are some differences that you have seen in the business owners who have crappy businesses compared to the ones who, they're netting a lot, they're doing all of the right things?
Yeah, so I have a particular client. I met him in a webinar. I gave a webinar to 100 real estate investors last year. Really great. Did a lot for me. Was able to generate a lot of business from that. Um, these guys are millionaires, mind you. All of them. They make a ton of money. And everything they do is based on ROI, right? If you're going to talk to them and try to sell them something, you have got to be able to, sell them a value proposition, because if not, they're going to kick you out of their room very quickly. It's almost, it's just like that. It's very difficult to sell to rich people, for lack of better words, because they look at everything from an ROI standpoint. So this guy, he became my client. He, in a sense, he's pretty much a hedge fund manager.
Mm.
Very smart guy. And what separates him is he's very knowledgeable, right? So he'll call me ahead of time with things that I couldn't even get to him about because he had already read about it, right? He does cross-border transactions. He's called me about, certain tax strategies and stuff that he wants to implement. And I'm like, wow, we didn't even get a chance to get to that yet, but yeah, let's do it. So I think what separates a lot of those business owners is they read a lot more than a lot of people. There was a study done by Dr. Dennis Kimbrough. He's down in Atlanta. He teaches at Clark Atlanta University. He did a study where he interviewed about 20 millionaires
Mm.
over the span of a year, a couple years, whatever. And what he found was the common theme for how they were able to amass such a substantial wealth is they outread the next guy. That was pretty much their answer for each millionaire that he interviewed. So I read a lot. I read 10, 15 books throughout the year, and that's increased my reading, right? I read every night. I've been doing it throughout the year. I've been doing it since last year. I read every night, at least a couple chapters a night of books that I'm into, whether it's, informational books or whatever the case may be. I read because they read. That's what millionaires do. They read. And that really separates them versus the guys that don't have good businesses. And I kind of would, to me, I wouldn't say that I've seen bad businesses. I've seen a lot of disorganized businesses. I've seen guys who are doing really well, but their books are a mess. They don't keep any records. They don't have any documentation. They don't have any bookkeeping. Everything's just kind of like in their brain, or they're like writing receipts down on paper and like stuffing it in their shoes. You know, so that kind of separates the successful business owners are very organized and they read a lot. The disorganized business owners, they aren't organized and they don't read as much.
So let's say what's the bare minimum that a business, let's say, my business cannot afford to have someone like you on on the payroll. What on the bare minimum, let's say that I am on a trajectory for next year, being in a position where having someone like you is makes total sense. So on the bare minimum, what should I have, to be organized, so that by the time I do get to you, you're like, okay, we got something to work here, not, yo, what is this?
Right, right, absolutely. So at a bare minimum, you should have TurboTax or H&R Block, whatever the case may be, your local tax preparer, and you should have some sort of QuickBooks, FreshBooks, whatever the case may be, some sort of record keeping software to where you can get all of your expenses in order at the very minimum, because these services don't cost a lot, right? Anybody can afford QuickBooks. It's $30 a month, whatever the case may be. If you're a business owner, you have $30. You at the very minimum, you should have that. That will get you to a very good spot. Most people don't even business bank account. You should also have that at a minimum. You should have a business bank account. You should not be colluding personal funds with business funds. I have a business bank account, right? Wave accounting, that's free.
Let's
Come on.
post it up for people.
Exactly. It's easy, right? There's
Well,
so
that's not
many
what I use.
there's so many softwares, in accounting systems that are cost you pennies on the dollar. It's just a matter of you being on top of it, having a business bank account. Like I said, do not collude your personal funds with your business funds. I have a business bank account. I'm sure you have. I'm sure you probably have multiple of them, right? You're like a millionaire at this point, so
So, okay, I do have a question with that, because that is something I definitely struggle with. So, okay, for at least for me, my cash flow, it's a little up and down, and I'm sure for other people, like, they get one big client, okay,
yeah,
boom, 10K,
yeah,
but then you go 3 months with maybe not, like the cash flow. Okay, my question is, all right, it can be a little tedious sometimes. So, okay, it's hard for me to pay myself a fixed amount to say, hey, I'm gonna pay myself like if I was a W-2 employee,
right, right,
$1,000 a week, every Friday hits the account, all good. Because there's times where I have weeks that I don't make $1,000, and then I've had weeks that I've made $15,000, $20,000.
right, right.
So, how do you deal with the separation when it's a little bit of a tedious thing to have to constantly be switching money back and forth, back and forth?
Yeah. Yeah. And I struggle with the same thing. I've been 2 years into the business. I've done well. But it's not life changing yet, right? I'm still on my way up. And so I certainly struggle with that as well. Having a consistent cash flow is probably the goal for all of us. In some months you may not be able to pay yourself, and that's fine. The resources you do have, make sure you're taking care of the things that matter the most first, right? Your expenses, your bills, stuff like that. If there's a book out there that I would recommend for people to read, it's called Profit First. It's by Mike Michalowicz. It's a very powerful book, and it teaches you cash flow management, right? How to pay yourself, right? And it kind of flips the whole thing on its head. Instead of revenue, expenses, net profit, and then you pay yourself last. You're paying yourself first, right? So I would point people in the direction of that book. And Profit First is
Yeah,
actually
I,
something
I
I'm
had a
looking
I had a
to.
friend I had a
Yeah,
friend recommended me that book, and it was good. It was very good. Actually, I tell people, like, I cut so many expenses after I
yeah,
read that book,
yeah.
because he has you label your expenses. I think it was U P. So if it makes you money, it's P for profitable.
Right.
If it's a U, it's unnecessary. And then I started looking at all my stuff, and I'm like, yeah, I
A
need
lot
to
of
cut
use.
stuff around. And you
Yeah.
would think, yo, I cannot live with, for example, that's when I used to have HubSpot, a $500 a month CRM for a startup. Like, I honestly didn't need that. And I started looking at all this stuff, and I remember telling my girlfriend, yo, I don't think I can move. I don't think I can switch. And then I went to high level, which is what I use now, and I
Right.
pay $900 for the whole year. For the
Right.
whole year. And
See?
now I help people set it
Yep.
up. So I actually make money from that. And I got it from that book. That book is
That
amazing.
book, powerful book. I would
Yeah.
recommend that, if anyone out there, I would recommend you read Profit First by Mike McCallowitz. It's an extremely powerful book. And I'm looking to actually implement that as far as what I do on the tax planning and business consulting side, because a lot of people really struggle with that as far as being able to pay myself. Hey, money comes in, I don't know where it's going, I don't know what to do with it. So that's certainly a common issue that I run into with a lot of clients.
Yeah. So that's good to know that you, because he actually, I think, has a certification for CPAs to be,
Yeah.
trained on the
Yep.
profit first. And I wanted to find someone. So yeah, I gotta talk to you about that. Because I do use that. So I have the multiple accounts and
Yeah.
all
For the
that.
taxes, the profit, owner profit. Yeah.
Yeah,
Yeah.
but
Yeah.
even then, man, like my cash flow is so out of whack that I find it hard to have the time to be moving money around. And sometimes like I'll have money in the tax account, but then
Right.
just unexpected stuff
Yeah.
happens and I need
There's
to move
nothing
it
in the
out of
owner's
there. Like I
profit.
just
Right.
find it
Yeah.
hard.
Yeah.
I
Yeah.
even
Yeah.
though I know about it, I still find it hard. So sometimes like I'll be at the store, for example, and I'm buying something that's $150. My personal account, might have 50 bucks, but then
Right.
I might have
Yeah.
3 grand in another one, and I just swipe the business because I'm not
Yeah.
gonna go into my
Yeah.
bank and start switch.
Right.
So I still struggle with it. Is there
Yeah.
anything that you recommend or like
I
how
would
bad
say,
is that?
yeah, I would say, when these books, right? A lot of these books, and they're very good, right? Don't get me wrong, they're very good. But life happens, right? We get that. In your situation, what are you gonna do? You're at the store already. You need the money. You
Right.
take the money. It's just one of those things. The focus at that point is, how can I generate more revenue for the business, right? You kind of get that. As business owners, there's either two ways to become successful. We increase revenue or we decrease expenses. For some people, it's both. You either make more money and spend less. I struggle with that as well. So, there's really no magical fix for that. It's just the ebbs and flows of being a business owner, and you certainly aren't alone.
Nice, nice. Lasine, you had a question?
What's up, guys? Not really a question. Actually, look, I mean, I was gonna just kind of like elaborate of like how we run a actual insurance agency, and so we're always dealing with customer money. We're dealing with a crap load of customer like money as well. So one way that that we help keep our cash, that's our commissions expense account versus our actual escrow account. Like that escrow account is where basically let the customer's money. That's where the carriers are basically drawing the customer's money from. Whereas our expense account is where we're writing our paychecks, our office expenses, all that good stuff. But there are times when for example, I've got clients all over the state of Florida, especially my trucking clients, where one lady's got to pay me 20K down payment. So she's basically sending me a wire transfer into my actual escrow account of the 20K, and then at that point I'm basically moving my commission from the escrow account into my commissions expense account. So that's how we kind of keep track of our money instead of keeping everything into one account. It
Right.
really
Right.
messes up the book. That's what's my money, shit, what's coming out for the customer. So
Right.
there's like a lot of maneuvering parts in my business, and the best way to help manage is having two accounts, one escrow account and then one our actual operating slash AK expense account. That's how we manage it. And then going back to what our but sorry, I forgot your name, sir, but I really do believe in having QuickBooks. We use a really old school system called Quicken. It was made by QuickFile from like the year 2006. But the
Oh,
coolest thing
wow.
is it's really simple, really easy, and it's just as good as these 2024 softwares. And I'm taking over a look at family business, but the point of the story is that if you keep your books nice and organized, you can look back to like the year 2010. What the heck did we do back then? And just
Right.
like a quick snap. And it's really awesome to keep track of, paying this $30 subscription for QuickBooks or whatever it is. The value is so huge because you can look back into your own books in just a quick snap rather than trying to figure out, crap, how much did I do back that year? It just the investment of that $30 is so huge. I just want to, just kind of like double down
Ooh,
on.
but that's assuming that the person does go and label all of the
Right,
transactions, because
right, right.
QuickBooks
Oh yeah.
does have some auto stuff. So who does that for you?
So I do everything, on our own. Like all of our bookkeeping is so clean. Like if our CPA buddy saw my books, he'd be like, "Holy smokes, I want a client like you," because literally
Yeah.
every expense that I have per month, whether if it's someone coming to clean my damn windows for $20, or if someone's coming to change a light bulb for $50, it's all there. It's all labeled. Everything is to a T, because that's the best way to manage a business, to make sure that you're hitting max profitability and to know where every dollar is going. Even for example, when people come and, pay me for their progressive auto policy cash, I have a ledger from my actual escrow account. So just in case if Progressive is trying to sideswipe me for an extra $50, I'm gonna know where all my money is going because it's all on a ledger. So I really believe in
That's dope,
QuickBooks,
man.
and I use a little of an older system, but it's the same damn thing, gets the same job done, and it's amazing. But sorry to
You
take up
can
the time, but I
hire
just
me
wanted
to
to kind
come
of
change your light bulbs.
I know, right? I need to come. I need to have you come down and change all my crap because my shit's so old. But
$50.
it still
I'll come
works,
do
so
them
I
all.
don't. All right, guys.
Thank you for sharing that. Did you have a question, Chad?
Sure.
What's
So,
up?
from your experience, what would you say then is the best way to decrease your tax burden? Is it a mixture? Equipment, 401ks, accountability plan, Augusta strategy,
Right.
all this volcanic ash to Haiti, Novoderm stuff where you're spending money and they give it times 5,
Yeah.
charitable donations and all that jazz? Or is there like one path? What do you think?
Yeah, so I mean, there's what's the old adage, there's a million ways to skin a cat, I like to make sure that we are funding retirement. That's usually my go-to, just because, like I mentioned earlier, if we're actively avoiding taxes on a yearly basis, we need to make sure that you have something on the back end for when you retire. So for me, regardless, I'm gonna make sure you have some sort of solo 401k retirement plan, SEP, something like that set up to where, one, you are building a retirement, but then two, you're also still getting the benefit on the tax return. So that's my go-to. The accountable plan, that's an easy one. That's low hanging fruit. You write off your cell phone, your auto. You can write off, you can reimburse yourself for certain expenses, equipment, technology, things of that nature. The next one would be home office. Most people work from home, right? We're in a post-COVID environment. Everyone has a home office. Carlos is working from what I would consider a home office, right? He doesn't sleep there. He doesn't have to walk past his bed to get there. So he would qualify there. And with that, with his home, he could also write off his mortgage, his rent payments, his utilities. I mean, the fact that he's working from an office in his home, he can pretty much write off everything that's attached to his house based on a percentage of his home office, right? You're not going to be able to write it off 100%, but if his home office is 30% of his home from a square footage standpoint, well, then we can write off 30% of the rent, 30% of the mortgage interest, 30% of the utilities, that sort of thing. So once you start to stack these strategies up, it really gets. I mean, you can reach $100,000 in additional tax write-offs very quickly.
What are the big guys doing? So, when you get, so those strategies, would you say, because you said, like, in the case of Grant Cardone, the IRS stuff, not the IRS, the 401k, that doesn't, it's just a needle in a haystack. So,
Right.
when you get past a million threshold, let's say 5 million, 6, 7, 8 million, is it the same thing at that point, or what are we looking at, for bigger businesses, even beyond
Right.
that?
Yeah, no, certainly it's not the same thing, not even close, right? Because they are making so much money. A home office deduction is not, that's pennies on the dollar for them. So what the wealthy are doing, they're investing in real estate and they're writing off their real estate, right? So they're using a cost segregation study. They're using bonus depreciation. If anyone is aware, Congress passed a tax law that reverted the bonus depreciation percentage back to 100%. So now you can write off real tangible property with a useful life of 20 years or less. 100% of the value, you can write that off on your tax return, right? So if we're talking, for an example, if I have a piece of real estate, and the value of that real estate, excluding the land, is $500,000, I can do a cost segregation study, which would then accelerate that depreciation by about 30%. So now you take 500,000 times 30%, which I will pull out my handy calculator because I'm not a math whiz, right? We will do 500,000 times 0.3. That's $150,000 right there that you now can write off on your tax return, thanks to bonus depreciation and cost segregation studies, right? Now we're talking, if we're talking about a real estate professional who's doing $5, $6, $7, $8 million in real estate, which happens all the time, especially down here in Florida. I'm sure you're very aware. We're talking about massive write-offs that your typical business owner may not qualify for, but the wealthy are, because they're knowledgeable and they're making sure they are qualified for it, whether it be becoming a real estate professional, which is pretty difficult to do, or by investing in short-term rentals, which still allow you to enjoy those same benefits without becoming a real estate professional. That's what the wealthy is doing. They're investing a lot in real estate and they're writing it off on their tax return.
I heard something about when it came to taxes, like being classified a real estate professional, you get access to certain things. Is that why I keep hearing you say,
Yes.
tax real estate professional?
Yeah. So the real estate professional status is allows you full access to the losses that you generate from your real estate, right? Real estate generates what we call phantom losses, losses that only show up on the tax return, right? We know that real
That's
estate
so messed up. That's so
it's
unfair for every other business out there. That
Yeah.
is so unfair, man. Like that
Yeah.
is such a politician. Like, we own real estate. This is what we
Yeah.
do.
Yeah.
That's
You
so
can
unfair. Like, then you can go get a loan and you write off all these expenses that technically, quote unquote, don't exist, and then you can still get the loans.
Exactly. Yep. And you can thank Ronald Reagan for that, and then you can thank Donald Trump. Those are the two that pushed it, and made it what it is today. Certainly Donald Trump. The Tax Cuts and Job Act
Oh, I didn't know that.
has really, it's completely transformed the tax code, and that's the reason why they passed a bipartisan law this year that reverted that bonus depreciation percentage back to 100%. Because this year was actually 60%, right? So our same example, it wouldn't be $150,000 that you could write off. It would have been a lot lower this year. So that's what the wealthy are doing. To become a real estate professional is very difficult. One of the more daunting tasks, and I actually have this written in an ebook that I'm getting ready to put out here in a month or two. One of the more daunting tasks is you have to perform at least 750 hours of real estate throughout the year, and it must be your primary job, right? So if you are doing real estate, but you're also a doctor, you don't qualify. If you're doing real estate, but you run the Young Sharks, you don't qualify, because real estate is not what you do, and the IRS obviously knows that.
So what? Okay, let's say hypothetical. I have a business. I don't know, 35 million a year. I'm looking for ways to save taxes. I already did all of the other stuff. What are these people doing? Are they just taking the money away from the business and investing it into real estate and justifying that, or how are they taking it? Because I imagine that not every wealthy guy is a real estate professional.
Right. And the majority aren't, right? So a lot of them are investing in cash balance plans, which will allow you to supercharge your retirement in a single year. So what's great about the cash balance plan is you use an actuary company, right? They kind of, for lack of better terms, guesstimate your lifespan. And then you have certain allocation amounts. There's tables out there and stuff that you can look up. It kind of lets you know what the allocation amount is. And it allows you to really supercharge your retirement. So if we take that same solo 401k example, you can invest, $70,000 for the year. In a cash balance plan, you may be able to invest $400,000 in a single year and write that off, right? So that's one of the major tax strategies that a lot of wealthy professionals are using. Another one, if you're in more of the charitable mood, a lot of people aren't, right? So it's not a strategy that comes up a lot for me. A lot of people don't just want to give their money away, but there are like uber rich people that are doing this. You could do what's called a charitable remainder trust, and you can donate, up to 60% of your AGI in cash, right? So if you're making 10, $15 million in a year, you can donate, a couple M's and take a write-off for that. That's another one. The major one this year, and it's really for the past 2 years, that's like the new hottest toy in the block, which is also in my ebook, is short-term real estate, right? i.e. Airbnbs, VRBOs. A lot of professionals are investing in short-term real estate. If we take my same client who's that hedge fund manager, he was just down here in Orlando. He's getting ready to buy a 10-unit building and Airbnb it. And it's gonna make him a lot of money. The value of it's a multi-million-dollar piece of property. And because he's gonna use it as Airbnb, he now qualifies. He will be able to receive the same benefits as a real estate professional. The test to qualify for short-term real estate is a lot simpler than your real estate professional. Now you only have to do 100 hours of real estate in a single year, and it has to be the most out of anyone else. So, for example, if Carlos and I partner on a real estate transaction, and I know that I want to be able to take this deal, take the bonus depreciation, the cost eggs, I want to be able to write that off on my tax return. I have to do 100 hours. Carlos can't do 120 because now I don't qualify. So long as I do 100 and I'm the most out of everyone involved in this deal, I qualify. So it's a lot easier for people to get into it and then be able to write it off on their tax return. So a lot of people are investing in Airbnb. My only disclaimer is do your research, right? We know that there's a lot of cities in America where Airbnb is not great. Atlanta, New York, places like that, I wouldn't encourage you invest in short-term rentals there. Florida,
Well,
I
New
would,
York, they
I would
banned
encourage
it.
it.
New York, I heard that they banned it.
Exactly. So you can't even do it, right? So make sure you stay abreast on the latest laws for Airbnb. Outside of that, it's really a dynamite strategy. But make sure that if you're going to do it, you're doing it because you want a cash flowing rental property, not because you solely want to take a position on the tax return. Don't let the tax tail wag the dog, right? Make sure you're doing it because you actually want to get into the business of
Right.
owning real properties and making money.
Right, right. Nice, nice. Well, we're already at the hour. So I have a question from Rahim. I'm sure you read it already, but I'll read it for everybody. So he asks, are there any additional tax implications to having an LLC registered under an irrevocable trust? An example, an LLC owning a rental property.
Additional tax implications. I would say that it would have its own tax return. That's kind of the biggest thing I can think of. Putting an LLC inside of a RLT. I haven't heard of any additional implication. Like, does he mean additional taxes paid or any sort of legal work? Implications is kind of like, it's a little bit of a broad term. If you can kind of specify
Yeah,
just
yeah.
a little
Well,
bit.
more so on the side of having it under an LLC has that protection of risk of getting sued, right? So, is there any now risk to the trust that's now open where potentially tenants can sue the trust for accidents or something like that?
No,
And
I would say that it's actually almost, double sealed in a sense, right? There's the asset
Sure.
protection because you have the LLC, but now it's inside of a trust. So in some sense, it becomes almost impenetrable. I wouldn't say it's completely impenetrable. If it really got into the weeds in court, they could certainly peel those layers back. But if that's how your entity is set up, I think you're in a really good spot.
Okay. And then as far as like tax returns go from say I now become the beneficiary of the trust or my kids become the beneficiary of the trust, do they then have to pay taxes on the property once they gain it or sell that property later on in life?
No, they would. So once your beneficiaries receive that piece of property, they would receive what's called a step up in basis, to where there would be no estate taxes or capital gains taxes being paid there.
Okay, perfect. Thank you.
Yep.
Sweet. Lacine?
Hey, one more question. So, if someone's like a pretty high W-2 earner, let's just say, look in the realms of like 200, 225 in that ballpark, does investment property depreciation still help reduce taxable liabilities? Or is there like a cap on W-2 earnings that will take you out of that tax strategy?
Yeah, great question. And that goes back to what I was saying before. It depends on the type of rental property they have, right? So if it's a traditional long-term rental property, they're not going to qualify as a real estate professional, right? We understand that because they have that day job, that would disqualify them. So from that standpoint, the losses that they generate from their rental property would be limited to just $25,000. That's called the active participation rule. So long as they're actively doing real estate, they could take $25,000 of those rental losses against their personal income. Here's the caveat. It's subject to AGI limitations. So for whoever you're speaking about, because they make almost $200,000 in their day job, they probably wouldn't get that. So short-term rentals may be the way to go for that person.
And then is there like an exact description in the eyes of the IRS of what short-term rentals mean? And then is there a longevity, how long you run that short-term rental annually?
Yes. So 100 hours for the year, right, would help you qualify there. No concierge or hotel services, right? So in order for your Airbnb to be treated as though an Airbnb from the eyes of the IRS, you can't provide daily cleaning, bed and breakfast, don't take their bags in for them, bellhop service, things like that, because then they'll disqualify you and they'll deem it a hotel, which is going to open up an entirely different can of worms. So make sure you have those. And I actually did a webinar last year where I went a lot more in depth. It was about a 2-hour webinar. There's a whole host of rules, but you only need to qualify for 2 of them to really be able to satisfy it. I would say focus on the 100 hours test, and then don't run your Airbnb like a hotel, pretty much like a bed and breakfast. You do those 2 things and you're fine.
I look forward to getting to know. Thanks for your time today.
Yes, sir. Thank you.
Yeah, I think we'll definitely going to be scheduling, like we should do another follow-up, because I mean we can talk about this stuff for ages, because there's
Hours.
so many scenarios, there's so many and it's such an important thing. But I appreciate that. Before we wrap up, I always like to end on an entrepreneurial note. You did say that for the last year or so you've been reading almost every night. So I'm curious as to, what are your go-to books? What are you reading now? That you would suggest for people?
Oh, absolutely. And if you don't mind, they're right behind me. I can grab them. I can show you real quick.
Sure.
Cool. I'll show you my 2 right now that I'm binging. So the first one, you may have heard of this. You actually can't see it. What would the Rockefellers do? See if you can.
I think I've heard of that book.
Yeah. What would the Rockefellers do? It's essentially a book about 2 families, the Rockefellers, and J.P. Morgan, his family. One used life insurance, and now the Rockefellers are still one of the richest families on the planet, and he's been dead 150 years, because they had a family trust and they were invested in a whole life insurance policy. Those funds just continue to accumulate, wealth continue to be built, and they're still super rich. The other family is J.P. Morgan. His wealth was completely spent in one generation. His son got an inheritance. He completely blew it, and you never heard of them again. So that's a tale of 2 stories there. It's pretty much, it takes you into a deep dive about life insurance and why investing in it can be a very powerful tool for you. I would highly recommend that book for anyone who's interested in learning about life insurance. I, for myself, am. That's why I'm reading it. The other book is the Self-Directed IRA Handbook. That's by Matt Sorensen. He's also under the Mark J. Kohler umbrella. He's kind of his right-hand man partner. That's the person pretty much who's taught me everything about solo 401ks and self-directed retirement accounts, putting real estate into your retirement account, investing in businesses through your retirement account. It kind of takes you the ins and outs from start to finish. You know, I'm a nerd. I read nerdy books, and you know, I have a great time doing so. Those are the two books right now that I'm binging the most.
Nice, nice. That is great. Well, man, I appreciate it. Thank you so much for your time. I think I lost my camera there. So hopefully people got some value. Then if you haven't done your taxes, that helped. We'll definitely be talking because I actually do need to do my taxes. Yeah. What was the best way for people to reach out to you? You said you talked a lot about the ebook. Is that ready yet?
No, so I'm actually in the process of doing edits and stuff right now. I'm not the type of guy to do, I don't like other people writing stuff for me. I want to make sure I get the information out there. So I want it to be very thorough, a very detailed book. It's not going to be super long. It's about 15 pages, but it's all tax strategies, start to finish. I jump right into it. It's no fluff. We get right into the meat and potatoes of it. That's going to be a really good book when it comes out. Give me about another month and we should be good to go.
Perfect, perfect. Yeah, we can send it out to everyone when it's ready. What's another good way of people to get a hold of you? Maybe if they want to schedule a consultation or if they want to, follow you, get in touch later.
Yeah, definitely. So I just put in the chat my website, azotaxadvisor.com. It's up, it's running. I'm actually going to be changing it around. I just finished doing a business photo shoot, a business branding shoot. I'm becoming a lot more visible. I've done, more speaking engagements. This isn't my first one. So my website's there. You can email me, azeltaxadvisor@outlook.com. You can follow me on Instagram, Azel _tax advisor. My Instagram is new. It's up and running now. Actually getting ready to put some pictures up there because I just finished my business photo shoot. So be on the lookout for that. Yeah. So yeah, there you go. Give me a shout, give me a follow. I'm gonna be actually showing up a lot more in person to the Young Sharks events now that tax season is starting to kind of wrap up. You'll start seeing me a lot more. So don't be afraid to speak, say hi, love to talk, love to talk nerdy stuff, whatever it is, business, life insurance. Come talk to me. Let's chat.
Awesome, awesome, man. Love the energy. And again, thank you so much for doing this for us, and we'll stay in touch. For everybody else, thank you for coming. We'll be wrapping up the meeting now.
All righty. Thank you guys. This was great, and enjoy your evening.
Alrighty. Alrighty. Take care, guys. Bye-bye.
Bye.